Hello, welcome back to my YouTube channel, Investment Mindset. Today in this video, I'd like to share with all my audience how I deal with emotions when it comes to stock trading. I hope all of you are having a great day. I want to discuss on a very important trait, that is psychology and mindset, which would have long-lasting impacts on our performance in operating as a stock investor or trader. Just remember that I do so for educational purposes based on my own practical experiences. Now, allow me to share on my investment mindset that I truly advocate and practice. Firstly, I believe it is impossible to sell at the very top. In the context of the US stock market, if I'm short selling, I'm not trying to pinch every penny until the very bottom, and I take profits on shorts once they have achieved at least 10% or more. If stock fall further, so be it. It is not in my personal methodology to hold short positions with long time frames. If the stock sell off further, I would not mourn over it as a wrong decision to cover prematurely. Once I've taken my part of the downside move, that it is for me is part of my playbook. I have decided to completely eliminate greed from my thinking and never try to take the full wins off the table. I also believe every one of us should form our own playbook. Let me quote one of the most recent example. I only caught a partial portion of the Exxon downside move as I forecasted Exxon stock to reach around $100 and $102 range when Exxon was trading persistently around $118. Eventually, Exxon fall further to $98. However, I did not let this bother me as I did cover my Exxon shorts around my forecasted level. Plain and simple. Discipline is very important in trading, or else I know I will have to face the consequences. Secondly, I also believe it is impossible to buy at the very bottom. This is why I always advocate to never buy at once, instead to inch into it and buy in several tranches. If the price went down lower, I would then buy in more to dollar cost average down on my long position, and I give time for my long position to work out. Given the context of the current market, we are essentially in a constant battle zone and a tug of war between the bears and the bulls. As a wise trader or investor, my goals are as follows. First, always survival first. Second, only execute a trade when the market presents it to me instead of forcing on a trade. This means I will only initiate a trade when the technical analysis is in our favor with high probability. Third, exit from trades at levels that I have forecasted earlier as long as I have made profit. I do not need to take off every last penny from the table. This prevents greed from taking place. Fourth, analyze and look out for the next high probability trade setup. Have an abundant mindset and not obsess over one particular trade when there are plenty more available. Doing so greatly enhances my winning probability. Let me share a practical real example here. Recently, I long on Alibaba stock when it was trading around $83. Last 2 days, Alibaba stock surged to $93 to $96. My sell target price of Alibaba stock was at $93 and above. It gets to $93.45 during pre-market and I sold it. At the same time, I did have call options on Alibaba, which I sold it when the market opened and when Alibaba's stock surged higher to $96. As of yesterday, Alibaba's stock price surged higher and closed at around $99. I understand the emotions that if a stock goes up further, many may feel regretful as if they have left money on the table. But did I feel regretful for selling it too early? No, because of my playbook. I have gotten the profit I have forecasted earlier, and my playbook is never to grab every penny of profit off the table. Remember, I always remind myself there are plenty of other profitable trades opportunities waiting for me to uncover. Now, some of you may think that my methodology is too conservative, but it is precisely using this methodology which has also helped me averted regrets from trades that was in green and eventually retraces back lowers into red. If I had not sold it earlier, I would have registered a loss from a profitable trade. I also apply the same methodology on my properties investment. I do not try to sell my property at the highest price possible, but I still sell it at reasonably good profit. I like leaving some money off the table for the next buyer, thus creating a win-win situation. Only you can decide what is more important, that is, following your own rules and discipline, or the urge to press the trade until you maximize every penny from a trade, but with the risk of turning a profitable trade into a losing one eventually. For me, I know what I have decided to do. I have predetermined targets where I would exit from a trade and treat that as a mission accomplished once achieved. If I try to time until the very top of a market, I may also risk to be one counter trend away from erasing everything I have earned from being right on the long side. The same logic applies on the short side if I am trading in the US stock market. I know if you are trading on Bursa Malaysia, shorting of stocks are not possible, except only minority few selected stocks trading on Bursa Malaysia is possible and not as liquid too. For this reason, the way I operate mentally is, first, I always remind myself there are plenty of new trades opportunity there waiting for me to uncover, so I do not chase impulsively or FOMO after a particular trade. Once I have exited from a trade, I would reflect on any lesson I could learn if it is a failed trade, and I move on quickly and look for other new trading opportunities. I also consciously try not to think about the opportunity cost. I always remember that survival is my number one priority. Lastly, and equally important, I do not aim for overnight success or home runs, especially under this choppy environment. Instead, I aim to make money from this trade there, and there. Even the world's most renowned investor Warren Buffett made his first $1 billion by the age of 30. By the time he turned 39, which is 9 years later, his net worth became $25 million. And today, at the age of 93, Warren Buffett's net worth is $105 billion. Now you get to see that growing wealth, you need consistent and persistent effort compounded with time factor. In conclusion, to be a highly successful investor or trader, knowledge alone is never enough. Patience and lots of patience is required, and do not always hope for every trade to quickly play out and be depressed when it didn't. Do not let the ups and downs of stock market to dictate your mood. And timely execution when a trade setup presents itself is equally important, if not more. I hope my sharing today would help you to become a better stock trader or investors, and thank you for watching till this end. Bye for now, and may the good Lord bless you and your family abundantly.